All right, I am here with Dan Farrell from Ruoff Mortgage. Hey, Dan.
How's it going, Jen?
Great. How are you today?
Doing fabulous. It's beautiful outside.
Yeah, it's nice. Well, I
Yeah.
wanted to talk to you today about the everything that's going on right now globally with like Ukraine and Russia,
hmm
and how does all of that affect mortgage rates?
So you're having a lot of customers ask you about that, I take it.
We
So,
are, or they're like
okay.
waiting to sell maybe, or
Uh,
they're I'm not sure if they should buy right now. You know what I mean? Stuff like that.
hmm
So what's
Yeah, I
your
mean,
perspective?
uncertainty obviously scares people.
Hmm.
Historically, with times of uncertainty, rates do tend to go up. So what had happened a few weeks ago, or this real recent here, was rates did kind of slow down on the rise and
Okay.
kind of bump down a little bit, as you may
But they
have
usually
seen.
go up.
Yeah, they do overall. Yeah, and here's why. Here's why. Inflation.
Yeah.
Inflation is the enemy of inflation is the enemy of interest rates.
Okay.
And if you really want to know what's going on historically, watch gas prices. Interest rates, when gas prices go up, interest rates go up. When gas prices go down, interest rates come down. There's a definitely, they're kind of tied together. It's pretty crazy when you look back historically.
That's
So
interesting. But you said this time, though, even though the interest rates have been going up and clearly gas prices have been going up, they kind of like
mhm.
it sounds like they went up slower than what you thought. Is that what you were saying?
Well, they paused, or they went down a little bit because people were moving money over to bonds,
Okay.
just moving their, kind of having a little bit more safe money. So that kind of now has cooled off, and now rates are continuing to kind of go back to where they've been on their I guess their peak, if you will.
Okay.
Um, I don't think you're going to see it skyrocket up or anything like that. I mean, there's a balance right now with the stock market and the bond market, and so
Right.
there's this little dance going on right now with that. So it's but it's there this inflation is a real big problem, and that's
Right. It
yeah
is.
that's really what's driving the rates up.
Let me ask you this. So people know that they should ask about rates, and I think that they partially understand what it means to them as a buyer. But can you
Mhm.
explain like really why does it matter? Like how does it affect the day-to-day of a buyer? Like how does the
Well,
interest rate affect them?
I mean, rates matter because people are looking at their affordability of what they can buy.
Hmm.
Rates get too high, and I'm talking about this is not going to happen, right now. But back in the past when we were talking about 7-8% interest rates, there's that level where it's like, well, it's just cheaper to rent,
Right.
and so people are looking at that and they're weighing out their options, and well, should I just stay here and continue to rent? And
Right.
so that's one thing. The other part is that people are in their houses right now with a 3% rate or a 2.5%
Yeah,
rate,
maybe
and they're
they probably refinanced when it was
right,
really low. Right.
right, and they're like, why do I want to, I might as well just stay put. I don't want to give up my low rate to go move into a new place with a 5% rate or something like that. But it's mainly it's affordability. People are also, it's another interesting thing, and I heard somebody say this a few days ago, is kids in school are like, well, I remember I did this project in my senior year in high school, and I learned that mortgage rates were 2.5%.
Yeah.
So now 5-6 years later, they're out in the marketplace trying to buy a house, and I'm making this up. Let's just say the rates are 5.5%. Now they're going to be like, oh, I remember rates were 2.5% or
Right.
whatever. So
Yeah.
you got this whole perspective thing that's a little different because we've never
Well, I
had
think like if
rates that low.
you like when the rates were lower, if you could afford, say, $350,000 house based on your income and all the stuff, right?
hmm
If rates like doubled, like say they went from yeah, 2.5 to 5, and if you were depending on you may not be able to afford a $350,000 house, it may end up only being 325, right? Or something like
Right,
that.
right. Yeah, I mean, you just gotta. I would say this: if you're in the marketplace, or you were in the marketplace, and maybe decide to rent for another year, and now you're back at it, and you're starting to look again. just, definitely get with the your loan officer, and double check things, and just make sure what you were expecting for payment and everything is still in line.
But do you
And
think, it sounds like historically, and we've seen it, rates are starting to go up. Do you think that that will continue?
that rates will continue to rise.
Hmm.
I think it's going to be, especially with all the uncertainty that we just talked about,
Yeah,
and trying to kind of balance things out. They're going to go up, but it's nothing. It's not going to be like skyrocketing up.
right. Not
So
like double
it's just going to be great.
digits.
Right. It's just going to be no, nothing like that. But like, just it's going to, right now we're in roughly in the low fours,
Right.
and that will probably hang out somewhere in the mid to high fours, maybe by the end of the year. But it's
But I think
nothing.
like what people need to know is like, so if you're borrowing money from, the lender needs
Mhm.
to make money, right? And so one of the
Right.
ways that they make money is on the interest rate. So when you make your payment, a portion of that goes to the lender and a portion of it goes down to pay down your debt. The lower the
Correct.
interest rate, the more of your own debt you're paying down. The higher the interest rate, the less of your debt you're paying down each payment.
Right. Right. Exactly.
Yeah. So it's just
So
really, it's about math, because we get a lot of people that are like, well, prices seem high. Right. However,
mhm,
if it depends on where you think interest rates are going to go. And even though
right.
the price may seem high, every time we need to do the math with the lender and look and say,
Hmm.
okay, well, what do you think that interest rates are going to be? And every time you make a payment, you're actually getting closer to paying it off than if you waited and prices were a little bit lower, but the interest rate was higher.
Right.
Yeah.
Right. It's really, and then you got the whole thing with, we talked about this last time. People are like, well, I'm going to wait for prices to come down. They're not going to come down. They
Well,
may.
I don't think they'll come down a lot, but they wouldn't come down enough to make it make sense because the interest is going to rise. So,
Right. You're not doing yourself a favor by
well, and
waiting.
even if your payment stays exactly the same, like let's say if you bought a house now for
Hmm.
your payment's $2,000 a month, or you
Hmm.
waited, and at that point when you waited, the price was a little bit lower, but the interest rate is higher, your payment is still $2,000. Every time you're making a payment, you're paying more to the bank and less
Right.
to yourself if you wait.
On the on the amortization schedule, there's
Mhm.
definitely each payment, more money is going towards principal.
Right.
We also show we show our clients how making that extra payment, or make it or even setting up extra principal each month, what that does, with paying off a loan faster,
Yeah.
or just paying it down
There's
faster.
a lot of
Um,
ways.
and also you can knock down what they call the interest rate, is now that you're lowering it down to what they call a lower effective interest rate, because you're putting that much more towards the principal. And then
Yeah. I
also, of
think,
course,
oh, go ahead.
I'm sorry. No,
Go
you're
ahead.
fine. I was going to say also, of course, there's other options: 20-year mortgage and a 15-year mortgage.
Mhm.
Those rates are always going to be lower than a 30-year. So,
Well, and I
um,
think too is that, math is hard for a lot of people, or it starts to get confusing. And this is really a math problem. And that's why it's important
yeah,
to have a good lender like you that
thank you.
understands your goals as a buyer and as a customer and can really narrow down those options to best fit you, and then explain it
Right.
like over the long haul how it directly impacts you. And then that gives you, the buyer, just the information you need to know to make a good decision. Basically, you're not just blindly
Exactly.
just believing everything.
Bingo.
Bingo bango.
Yep.
My job. Okay. Well, Dan, if people, where can you do business, or where can you help people? Which states?
Pretty much, we can originate loans throughout the country,
Okay.
except for Nevada right now.
Okay.
So we could definitely, give us a call. We can do a little consult and get you going. So
What's the
yeah,
best way to get a hold of you? What's their phone number?
513 400 4449.
Awesome.
And I also 513 preapproval.com. So if
That's
you want to
easy enough.
get your application in, 513 preapproval.com, and we'll jump on it and be in touch.
Awesome. Well, thanks for being on, Dan.
All right. Thank you, Jen. Have
See
a good
ya.
day.
You too.
Bye.